Hi, everyone, and welcome to the TimingResearch.com crowd forecast news for July 11th, 2022. And we are recording this at 1 p.m. Eastern Time, and this is episode number 350. My name is David Cosmeter. I'm the creator of TimingResearch.com. And this is a Wealth 365 week. So I normally cancel my shows on, Wealth 365 weeks, but I just forgot to cancel this one. So we're going to go ahead and have it. And but for the rest of the week, be sure to check out wealth365.com, and my friends over there have a great event going on. So be sure to check that out. So today I have arranged for Sunny Harris and Simon Klein to join us, and the option professor is back to moderate. So I'm going to go ahead and turn it over to him.
Okay, thanks, David. And certainly have had a lot of activity here in the markets in the last couple of weeks, particularly on interest rates. One week it was down 20 basis points on the 10-year, then it went up 20 basis points last week. So it's getting a little volatile out there. So it'll be great to hear what our guys have to say this week. And of course, we've got inflation numbers and other things coming up like earnings. So it'll be very interesting coming up here, which way they break this thing. Okay, our two speakers are great experienced people. Definitely want to hear what they've got to say and get their slant on things. First up is going to be Sunny Harris. Sunny, a little more about yourself and Money Mentor, please.
Thank you, Jim. I am a mathematician, trader, and programmer. I've been a professional trader for 41 years. I like to do mentoring, tutoring, and consulting. I'm an easy language programmer, author of 6 best-selling books, and almost done with my 7th. I give a free Sunday night newsletter, Sunny Side of the Street, a free live trading room, free forums, and a free podcast. And my website's moneymentor.com.
Perfect. Simon Klein, again, you operate a little differently than Sunny. You have your own particular proprietary stuff you do. So a little background on yourself and what's going on at your company.
Yeah, hi, Jim. So my background, I started my professional life straight out of university working at Credit Suisse in both London and New York. And then I moved, onto the trading floor in, it was emerging markets, actually. So that's where I was. And I left that, the world of investment banking world quite a number of years ago and decided to go by myself. And, after trading and, successfully, people asked me to start training them, and then kind of one thing led to another. And then I was training a whole group of people. This was about 16 years ago, something like that. And then as a natural progression, you start a website and you start to help more people, and then word gets around. So basically, we're all about what I found over the years is understanding how to read basic price action is probably the best way to go, especially for beginning traders and sometimes for even more experienced traders. I like to keep things simple. So I focus on reading the market based on price action alone. And in what we do at TradeSmart, and the website's tradesmart4x.com with the number 4x.com, we teach people how to read the market professionally and how to run a successful trading business. And that includes how to develop your own trading plan and strategies which fit your own personality and lifestyle. So I found over the years, that's usually the quickest and surest way for most traders to get to success in their trading. So I've had, over the years, many people go through the training and become successful traders. Even have one of my students, clients from just over 4 years ago, who's now teaching her own course on how to trade NQ at the Cash Open. And we have a nice group of traders in there. So we have a Discord server and a trading room, and where other traders kind of share ideas together and grow together, which is really nice, a nice supportive environment. So that's what we're at. That's what we're about.
Simon, as a sidebar, since you have some background in the European banking system, EUFN is an ETF on the European banks, and it's dropped about 30% or better this year. Do you have any kind of an opinion or view? ECB is going to be meeting, I think, on the 21st of this month, maybe hiking for the first time in a long time. Do you think these banks are just having a sizable pullback, or is there going to be possibly a systemic situation that comes out of this thing? For
You know,
European.
the ticker is
European bank.
EUFN.
Yeah, EUFN.
I'm looking at it now.
Well, I'm just saying that's the basket of them, and obviously Credit Suisse would be in there.
Yeah, I have absolutely no idea. I mean,
Yeah,
I can
so
look
you-
at a chart and tell you what I see happening.
Yeah, but I'm
from a-
just saying you don't have an opinion
No.
of that at all. I just thought as a sidebar to ask. Okay, well, let's go into our questions on Monday, which is always the fun questions. Where did we open today on the S&P? Anybody have a good number on that? S&P open.
We opened straight down and then straight back up.
So the open was around 38.70 or something.
Right, almost exactly at 38.7.
All right, so we use 38.70 as a guidepost, and we're going to ask you guys where you think Friday we will be. Higher, lower, the same, or anything else you want to add. So Sonny, where are we going to be on Friday?
1, 2, 3, 4 days more. We're probably going to be down.
You want to share your Sonny bands and
Sure.
show it's behind the
Well,
Wizard of Oz's curtain, and hopefully we can understand it.
Yep.
You should be able to share now.
How's that?
There you go.
Looks good.
Yeah.
So the reason I'm saying that is because you see these two lines, the purple and gold in the middle.
Right.
Those things are flat right now and have been for almost 2 weeks. When it hits this DMA, dynamic moving average line in the middle,
Right.
you see it hit there, hit there, hit there, hit there again, and it's just been going sideways. That's what usually happens. The only way that thing will turn up and go up to the upper sunny bands, which are the green and teal ones right here at the top, would be to break out decisively of that dynamic moving average. But since the purple line is on top, chances of it breaking above that for very long are slim to none.
It's a rough racket. And those numbers come in about where, would you say? Around 30?
Well, the upper
8.
band's at 39.89.
Well, that's if we
outer
got out
band-
of Dodge City. But to get out of
Right.
Dodge City, you have to get above what, about 38.75 to
We need
39?
to break 39.35 to keep going up.
Yeah.
Chances are what's going to happen is going down to what's labeled here LIB, lower
Uh-huh.
inner band,
Right.
37.79, 37.80 is
Right.
right where that is.
Yeah.
And the lower one's at 37.17.
Right.
That's where I'm thinking things are going to go.
Yeah. Well, I mean, all you need to do is get a bad print on Wednesday on the CPI and have these banks come out and tell everybody that, things
They're
aren't going
losing money.
well. Yeah. And that would be the double whammy to get us down there, I guess.
It would.
So you think right now it looks like maybe a fade by Friday,
Yep.
unless of course, I mean, everything's got to be unless of course you get above those resistance levels, and then of course you change your view.
That's right.
Yeah. Simon, how are you seeing the tea leaves here between now and Friday?
Okay, so I'm going to show you my charts. Let's see if I can do that. Share screen.
That's the beauty of diverse opinions.
Okay.
Or actually diverse analysis.
Let's see if I get the right one this time. Let's try that one. Are you seeing this one, the E-minis?
Oh yeah,
You see my cursor moving around the 15-minute chart?
absolutely.
Okay.
And is
that's
a
good.
15-minute typical of what you try to do when you're doing the short-term trading?
No, no. I mean, I'm basically focused on the hourly chart.
Okay, the hourly. Okay, that's good to know.
Hourly chart for short-term trading, a daily chart for kind of swing trading.
Sure.
What's that software, Simon?
This is Thinkorswim.
Ah, thank you.
Yeah. And I've used this for years now. I kind of like the charting software. So this is a very critical level on the E-minis. Yeah. On the monthly chart, we're in a downward moving market. We're still on a downward moving market here, but if we go above, we look at the weekly chart, if we go above this high of 2 weeks ago, then there's potential that the market may start moving to the upside again. We may get this a move up maybe to this level. Now, if we look at the daily chart, yeah, this is when we get bullish price action on the daily chart within a bearish market on the weekly so far and on the monthly chart. So what we were looking at today, yeah, if by today, we don't stop where we are now and go down. We come up above this area, or at least not pivot here at the end of the day. There's a possibility we're going up. But if the day closes like it is now, if it closes down, the odds are we're probably going down, unless, of course, we go above these highs. That's as simple as that. So as you said, Jim, we think, we don't think in absolutes as a trader. We think in, if the market does this, then this is likely to happen. And if the market does something else, then this is likely to happen. And then it doesn't matter what the market does. It's going to do one of them. And then you know what you're doing. So that's how kind of we think this or that. It's going to do one.
Yeah, if you want to get bullish, it seems like you're going to have a 39 handle on it before.
It's got to go above here.
Yeah, I mean, it's going to, this 38 handles are not what you want to see when you're bullish right now. So we'll have to see what happens there. Okay, Sonny, what type of technical or fundamental things are you looking at that might affect your views this week? We got some reports, but do you have anything that could affect your views, or are you just going to be 100% technical and that's it?
Oh, I'd say I'm 98% technical.
Yeah.
I do look at when the reports are coming out, because the market can move quickly. It often moves quickly and then goes right back to where it was, like it did this morning. But the only thing I look at is sunny bands and my dynamic moving average.
Right. Yeah, I mean, there's something to be said about using technical analysis, because you are investing in a price and you have to know where the price is going. And you have to know where the momentum of the price is, that kind of stuff. However, we have to admit that things happen overnight that are difficult. So if you are carrying things overnight and something occurs, the market can make a substantial move overnight, and the technicals will change because of it. You know what I mean? That's
true.
Yeah.
I used to trade overnight. I used to hold positions when I was trading 15-minute charts, but I trade 5-minute charts and close out the positions at the close of the day.
Yeah. And that's for your trading percentage. You also have other stuff you hold a little longer term, right?
Oh, I definitely have stocks that I hold longer term.
Yeah.
Yes.
Yeah. Simon, what's your, I know you're pretty much technical as well. Is it mostly the day trading or the swing trading, or is it a really combination of both?
A combination of both, depending on what the market's giving, what the market's, what I'm reading in the market, basically. I mean, if the market's telling me there's a swing trade to do, then we'll take a swing trade. If there's a day trade, we'll take a day trade. If there's both, we'll do both. All depends on what the market. I never try and force the market. I try to be open to what the market's communicating, and then be able to take trades based on that.
Now, some people are talking in terms of big tech and maybe even financials going into all these earnings might, get a bid to them, particularly as we see the 10-year note is dropping in yield again. Do you guys have any feeling on big tech? Let's start out with Sonny. And big tech would, be XLK probably, or QQQ, something like that.
XLK, let me put that up. XLK. I love big tech. I love the technology stocks, but right now I'm only buying at the bottom of my sunny bands. When it breaks the sunny band, I go up and everything's stopping at the horizontal dynamic moving average. So I'm doing really short trades on tech stocks from the bottom of the band up to the midline and out again.
Right. And how about throwing the sunny bands up with XLK and QQQ and get an idea, maybe even SMH, and that'll give you the semis, it'll give you tech, and it'll give you obviously the NASDAQ.
Okay, you see it?
Yeah, so here we got which one?
There's XLK.
XLK. Okay.
And you see this, once again, this is horizontal.
Boy, it really they all look like they're singing the same song, which is
they pretty much are.
Yeah.
But you see here, this red candle comes down under the sunny bands, goes back up. That's the long right there. Only up to the DMA, only up to this purple and gold line, and take profits right there. So that's, that's 5 points or something. It's worth having.
Yeah.
And it goes back down to the outer band and back up to the DMA. You take the profit then again right there.
But it's been a while since March, April that it's been able to get to the upper deck.
Oh yeah, right there in
Yeah.
the end of March. It
Right.
went up there, but then again, right back down.
That's
Soon
what I'm
as it hits
saying.
this band and turns red, it's a short right there.
So people who've been biting on these rallies, these sunny bands would have been helpful to kind of avoid that, huh?
Absolutely.
Yeah, and then it's a beautiful channel that you could do some decent trading against, don't you think?
Yeah, the only thing you need to know is that if it's weak, it will not go back up to the upper band. And like
Yeah.
this, it stays under that purple line. Here it goes back up to the midline and back down. So all the trades right now are below that purple line.
Well, let's look at the other couple, the QQQ and SMH.
Okay, there's QQQ coming up. Same story again, isn't it?
Yeah,
Same exact story. And there we're right at the end of March again.
yeah.
Short from then. And
Yeah.
what was the other one?
The SMH, which is your NVIDIAs and all those kind of guys.
Same story. But then it
Yeah.
hasn't even made it back
Yeah.
up to this center line yet.
Yeah, the story is kind of changing where we had a shortage of chips and now they're talking about there might be a glut of chips. And of course, that's the nature of semiconductors. I mean, if ever
Right.
anybody has any long-term perspective on them, they do trade like a commodity,
They do. It's true.
and like any other commodity, when there's not a lot of them, it goes through the roof. Conversely, the other way too. What about the last one, which is the financials? Because we are coming into the season. And the season starts on Wednesday with JP Morgan. This is XLF. I might as well look at the regionals. I think that's KBE too.
Same story.
Yeah,
Financial-
boy. I mean, it's like,
You would think.
I don't know
with
if it's ever been,
interest rates
has
going
it always
up-
been, has it always been in this unison or?
No, they're not
Yeah.
always, but everything's pretty much down now. All the sectors are following.
Yeah. The regional banks are, I'm not exactly sure, but yeah. So that gives you a little bit of idea of what's going on with the banks going into this thing. And a lot of people are going to be hinging on, are they making money, on their mortgages, and they're obviously losing money on their mortgages because rates have gone up. And then that net income they get off of, people putting deposits in where they earn no interest and they go out and earn interest on their money. That's supposed to go up quite a bit this year, 15 or 20% jump in that. So that's quite a bit.
But it seems like people are not reacting to it.
No, not at all. One other one that people were kind of charming on is that the industrials might go up, XLI and XLB. Those are materials and industrials.
And is the story any different?
No, they look pretty much the same. Actually, they look
Much the
weaker.
same.
They look
Yeah.
they're not even at the line. And what about XLB, which is your
XLB,
materials? Yeah.
Same story.
Yeah. Very oversold, but that's not
Sure.
a good enough reason to stick your head in just for that reason.
Yeah, this one didn't even make it up to the midline either,
Yeah.
which is
And-
strongly down. It's not even flat yet.
It's kind of looking like they are throwing in the towel and recession is coming. Whether it comes in 3 months, 5 months, or 6 months, it's coming, right?
We're already in recession. We've had
Yeah.
2 down quarters and hit the 20% line.
Yeah. And you're seeing an inversion even more today on the 2-year, 10-year. So short-term interest rates jumping over long-term interest rates historically has been a very lousy outcome for the economy. Simon, with regards to yourself, things that you're kind of keyed on. Now, I know you look at the E-mini S&P. Is there anything else? Do you have a top 5 things you keep an eye on or something like that?
Yeah, okay, let's share the screen again.
Yeah.
I can look at charts. See this one, you see the E-minis at the moment? So I'm keeping an eye on at the moment on Bitcoin.
Oh, yeah.
And this is very interesting. You see there's 2 levels. There's a level here. We got above that level, but we didn't get above this one. And you see the market gap down today. So this is going to be interesting. If we get above here, we could see Bitcoin starting to move up again.
Mm-hmm.
If not, we're going down. This is so it's kind of a bit mixed at the moment with the market gapping down today. And I could see this moving down to 15,000. I think they said this last time, 15,000, maybe even to 12,000, 10,000 if it doesn't hold this level. So that's one thing I'm keeping an eye on. Another interesting thing is gold.
Yeah, could we put in something, because that's Bitcoin, but many people don't have a wallet and they don't buy things for 15 grand, but they do look at these ETFs. Can we look at GBTC?
Okay.
Because I had a $13 number as a fairly important level. I was wondering if it corresponded to anything you're doing.
Okay, it's at 13 at the moment.
Yeah, you kind of, oh, is it at already? Yeah, because I kind of wanted it to hold 13, or else it could be bar the door Katie a little bit again. Huh?
It actually gapped down today below there, and now we went up, and now we're kind of at 13, bang on 13.
Yeah. So this area here, if it started to give it up here, that's certainly, and what's underneath CCI?
Yeah, CCI, it's just an indicator that I had on many years ago, and I keep it on. I use it for one type of trading. It's maybe 1% of the time for base trading. If I'm trading in bases on the smaller time frames, it helps me time my entries. But I can do it without it. I barely look at it anymore, but I've traditionally had it on my charts. So it's kind of,
seems like it might be
the charts like that.
Is it a little bit stochastic relative strengthy or combination thereof?
It's good. It's an oscillator. So it can tell you whether things are overbought, oversold, whether you get the things that I like about it are the divergences. I'll give you an example. I can just see one now here. So you can see that you see the market makes a low here, and you get a CCI. The market makes a new low, and the CCI makes a higher low. This is giving you a sign that we may be going to go up. You see that?
That's not bad. Yeah.
That's our CCI divergences. They work on the upside as well. They can also help use time entries in sideways markets when you get overbought. It's overbought above here and oversold below the 100 and below the minus 100. You can see I've got it green and red. So when it goes from a below to above, market usually goes up, especially if you're in a demand, if you put that together with demand. So the divergences are very useful, especially if you're trading bases.
Sure. What about Ethereum, ETHE? I was kind of hoping that's not a good word, but I was thinking if it could hold 791, 790.
So this is Ether futures.
ETHE, yeah.
Okay. Oops. So again, it's also down. Notice the same two legs down. One, up, down. Yeah. So if we look here, this is from around, say, 47 to around 17, around about. So it's 30 down from here. Yeah. I mean, it could potentially go lower, but the moment it's holding. It's holding here. It's basing down here.
It's hoping that turnaround Tuesday is not just a slang term, huh?
Yeah, that could be interesting.
Yeah. Those levels, I thought both of those levels were kind of important, somewhere around 13 on the one guy and around 790 on the other. And it definitely seems like it's trying to hold that level.
I think we're going down to 4 on ETHE.
Well, that's the path of least resistance. That's for sure.
Could be. And another interesting one that I always look at is gold. Now, I can tell you this is going to be one that we'll come back to, but it's probably, I think we're going down to 1,600 and maybe even 1,500.
Yeah.
This is not an area. This wasn't an area to buy. If you understand the way the markets work, there was a level here. See, we pivoted here. And then this week we went below. So from this week, you get the biggest week down here.
Oh yeah.
Which was last week. This was a definite sell week last week. Once the previous week went below this low, we're going to take out this whole area. And we're coming down to this level now. See on the weekly chart. Now, I don't think it's going to hold this. I think we're going lower.
Yeah.
That's an interesting thing.
I was involved in Newmont mining and I thought it was a fantastic buy at 52, 54, and it ran all the way up to 80. And now it's back in the 50s. So, obviously if the Cadillac of gold stocks is going from 80 back into the 50s. There's something going on with the metal probably too, you know.
Yeah, I mean, you see what happened here at the highs. It failed to get above the highs here.
Yeah.
So it's been down ever since, you know, since we came back down, it's just been going down. Just trying, every time it hits a level, it bounces and goes lower. So here it may bounce a bit and probably go lower. Until of course
it's not, it doesn't have just a few headwinds. You got the strong dollar of all time. You've got interest rates going through the roof, and you got an economy that's slowing. And this stuff doesn't pay any interest. So, you know, it's hard to build a big case to have your garage full of gold right now.
So this is another one I watch on a regular basis. I mean, every day you're watching the dollar. And I called the bottom here, by the way, in the beginning of over here. This was the bottom at the beginning of 2021.
Yeah.
Over here, confirmed over here at the end by June last year, confirmed bottom here. And it's been going up, and I use something called price direction. The direction's been up since here. Since June last year, we're still going up. We just happened to reach level of supply, yeah, and they can see from 20 years ago. This is from 2002. If we break this area, we're going higher. We've got levels we can go higher from
and you know,
20 years ago.
A lot of it is being compared to 2001. So maybe that is the Geiger count, you know, the magnetic number that it wants to go to. It's certainly in the upper echelon of your overbought, oversold thing. But, you know, when you look around the area, you know, the yen's in no great shape. And then the euro obviously is not in great shape. And
here's one that we mentioned as
hard
well.
to go with
you
the
mentioned
yuan,
the
right?
yen.
Yeah.
Jimmy mentioned the yen. We talked about this last time. Remember we said it's going down. Yeah. Look at the yen.
Yeah.
Here you go. What did I say? It's going down. Yeah, we said, I can't remember last time we were on, and we said if it doesn't, it's likely going down. This is just a move up to go. We said to go lower, and here you see it's continuing to the downside. I don't think it's finished yet. All moves up are being sold for the time being.
Yeah, well, like I say, they have no interest on their money at all, and so that's a tough comparison. You know, one of the big things is what are interest rates doing, because they are overbought as far as the yields are high. But can you put up TNX? And it might be $ TNX. I'm not sure on different systems. TNX, like $ TNX.
Let's try TNX first.
Just go
this
to the one
10-year Treasury Index.
Yeah, there you go. Yeah, perfect. Now you can see that there is a little bit of an exhaustion at that 350 mark. And
35,
and you're also this is on the 10-year yield, so it should have numbers like 3.5 and
let me see if I can put let's see if it's
that's the 20 years, not the
20-year.
I'm trying to look at the
30-year.
Yeah. I'm just looking at the actual yield, you know what I mean, where it shows the actual interest rate.
Here's a 10-year Treasury note futures.
Yeah, that's going to give you the futures price. It doesn't give you the actual yield, but obviously you can use your common sense. If it's going up, that means that rates have dropped a little bit. This is a very short-term graph. Yeah. Oh, up here it's not.
All the way from the monthly down.
Yeah. So, this 115 area, it could be an area that holds up for a while. And if that's the case, that means interest rates aren't going to be going up very farther than they already had for a while. Is that possible? And that would fuel, tech and other things as well.
Yeah. Yeah. Anything else you want to look at? Want to look at the charts?
What about the small caps, IWM? That's another thing that if interest rates were to back off, they could benefit quite a bit. And there's a lot of short interest out there, and a lot of.
So a very interesting level here. Let's mark this out.
Mm-hmm.
This, I always see, this is what my eyes kind of focus in on. You see this big drop. When you're on the eye, it's like Newton's laws. Yeah. When you get an equal, when you break that, you get sometimes an equal and opposite force to the upside. But we're coming down for the first time, second time even, and we could capture and move up again.
Mm-hmm.
Yeah, either here or maybe there's a level below here as well. So this is a very interesting level. If we don't hold this level or this one, then we go all the way down again.
Well,
So
if
this
that 10-year note, which hit 350, went all the way down to 280, went just back up to 310, which is now at 298. If it is done with going up into the threes and it's going to consolidate lower, this is the kind of stuff that could have a very big turn if in fact that happens.
Yeah. And also you want to focus in, look at this. This is where I find it. You see this basing here? You see the market spikes up. Look at the CCI, lower high. See that? It's giving you a clue that this is, people buy. It's never really a good idea to buy a breakout to new highs.
No.
When the market's basing beforehand, almost always fails, and you get
that
usually kicks off the move in the opposite direction.
That was a terrible false breakout, wasn't it?
This one, yeah.
Oh God.
All trap scenario.
Yeah, that's the poster child of false breakout, right?
Yeah, this is a classic false breakout.
Here's one last thing I was going to say is on the interest rate situation, if it backs off, consumer discretionary is another one that could fly, but in particular, the home builders XHB.
Yeah, it's also an interesting level here. We're at this level. Which tried this, you see this tried to go down, but we got above here.
Yeah.
So it could be, and I think if the market starts big, we've also got a level above here. We're kind of trapped. We've got a level above. We need to get above here to go higher.
Yeah.
But what could be very interesting here, this is the things that I start noticing in the market. And I don't know this market so well, but what happens many times, if it wants to go up, what's it going to do? If too many people get in, it's going to drop down probably to this level and then go up. It's going to try and if too many people get in on the buy side here, it's going to drop down and knock them out and then go if it wants to go.
Right. And the Cadillac in this area is also Home Depot HD. And that used to be way up at 400 and something. And now you're picking it up in the low 200s. Is that a reasonable thing to look at, HD?
Yeah, there was a nice buy down here.
Yeah.
Once this move came up and you get this big bar down with lack of follow through, it's a buy. And I don't know how far it's going to follow on for. We've also got similar kind of area above. We need to get above here.
Yeah. But that's something, I think we can agree that the Home Depot is pretty much of a Cadillac in the home improvement area. And, maybe with rates rising, people are going to continue to be stuck in their houses and they all have a job and they all are making money. And maybe they want to spend some of that money on their home because they can't be moving anymore because the rate, have gone up to a point where they don't want to give up a mortgage at 2 or 3% to jump into one at 6 or 7 or whatever,
Yeah.
So that could be a big factor. Hey, Sonny, do you want to put up your bands and we can take a look at some things like big tech? There's some like big names out there that people probably would like to buy when it's the right time.
Sounds good to me.
Yeah.
Everyone's
telling me Facebook is a giveaway here. So listen, you want to start with Meta?
Facebook is not Facebook. Yeah, it's Meta now. Okay, there we go.
So, if we look at some of the longer term charts, can we see anything happening there and then work our way in?
Well, it looks to me like it's going to keep going lower. We've got
You're just barely hanging on there.
Right there is where we're going to go.
Yeah.
It's barely hanging on is right.
Yeah. Well, if they take the whole board down and under your theory of maybe going down to 37 and change, obviously this will be one of the participants in the Titanic, right?
That's right.
Yeah. But it is, like I say, it is getting a little bit on the lower side. Certainly if you wanted to sell the darn thing, you should have done it by now. It's gone from $400 down to 164,
Yeah.
So a lot of this stuff,
130 is where it's going to go as far as I'm concerned.
And
I
what
have.
about Apple? You know, is that a little just bounce towards 150 a bounce, and now we're really going to go down and hit that 100 area maybe or something? Who knows? AAPL.
Yeah, I'm trying, but my typing skills are lacking. Apple's doing better than everybody else. That's a monthly chart. Let's see.
It absolutely has one of the best charts. I mean, it's like they cannot get the thing underwater.
And you see here, it's over this was the flat DMA.
Yeah.
It broke out of that and
Yep.
it's heading up to the upper inner band, which is right at 148.
Right.
So I wouldn't be surprised if that one goes on up to 451 at the outer band.
And that's keeping the indexes up quite a bit too, because
Yeah.
it's so heavily represented in the major indexes. So,
Yes,
you know,
it is. And
if
you
they
see
took this thing down to 120, that would be something that would obviously hurt the indexes and get them into those lower areas that people are talking about.
it would hurt all of them. And then we're going to go down below that 20% line. This is, you see the green and purple and red and gold on the bottom, this horizontal, vertical stuff.
Yeah.
Apple gave a buy with that right there. You see that red candle and then a blue one right at that low?
All right.
That was a buy signal.
Yeah.
It looks like a good buy to me.
And then it would be just put your cells right underneath and let it ride.
Yep.
And then
I
actually
would
keep
put
moving
my
it up. Yeah.
cells right at that dynamic moving average, which is
Yeah. You don't want to see a
142.80.
130 handle on this, do you?
No.
Yeah. That's a good line in the sand for people who are looking at it right now.
Yeah, the midline at 142.80 is where I would put a stop. Just keep it close.
How about some individual, because we're going into earnings on banks. I mean, JP Morgan, JPM, and, see if any of these banks, JPM. Yeah. Let's see if any of these banks, these guys, Bank of America. Yeah.
So same story on that one, BAC. I used to think BA was Bank of America.
No, it's Boeing.
Boeing already got it.
Yeah. And
Same
so they all have quite a bit of resistance above. Whether they're going to
Sure
get through that
do.
or not, we'll have to see.
Yeah, they definitely have the resistance up there. And the purple line has been on top since February 24th. Well, that's an interesting date. That's the KWEB problem.
Yeah.
We got Putin's war affecting that.
That secondary green line I see pretty much has not been violated for a long time either. So even if it got great news, a pop towards 33.71 would possibly be met with some selling, huh?
I don't think it's going to go up that high.
I'm just saying, say they had an out of the blue wonderful report and the consumer is just in the most pristine condition of all time, something like that came out.
That's going to be a while. I don't see that happening for a while.
Yeah, no, but I mean, surprising things happen, right?
Yeah, they do.
Yeah. How about we look at some of these oil stocks, because the whole world is continuing to tout oil, even though oil seems to me like it has peaked. XLE will give you a nice broad look.
Well, it went up nicely, but oil's been going down. So I think that's following and right there's the sell signal. See right here where the blue goes above and the red comes below. That's the sell signal on that one on June the 9th.
Yeah.
It's
and the XOP, gives you more of those explorer types. The Halliburton Schlumberger kind of group. Yeah.
Mm-hmm. Same story. Right there's the sell signal on 6.8.
Yeah. Now, when you look at this, I mean, would you take a shot at it on the buy side if it got above like the 117.18 area that you've got the green line there?
I wouldn't touch it until it breaks that DMA right here, the purple and gold lines.
I got you.
So you would that area. Yeah. I wouldn't be a buyer.
Yeah, because hoping for a bounce off of the lower thing is the same reason people would have been in there from 127 down to 113.
Never try to catch a falling knife.
Yeah. Buying the bounce can be very expensive because I'm sure it turned very quickly from that rally.
That's the mistake that Kathy Wood keeps making. She's trying to buy bottoms.
Well, let's look at ARKK because that is another one that in the second half of the year is supposed to have this wonderful time of it, especially if we see that 10-year note back off that 3 number.
Yeah, there's a buy signal right here, which is on, what's that date? I can't get it to stay still. On 5/12, she had a buy signal right there at that bottom. It's been up, it's slightly up from there,
Yeah.
still in a buy signal.
Yeah.
But she keeps, I get her statements every day, and so I know what she's buying and selling, and she keeps trying to buy bottoms.
Yeah.
I wouldn't buy a bottom in a bear market for anything.
Well, I think she's basically, as she says, I'm looking at things on a 5 and a 10-year basis. And
Right.
unfortunately, people get their statement monthly.
Mm-hmm.
And so that's that. And what about the fertilizer and the agriculturals? CF is a fertilizer company that was doing quite well, and then it was doing less well, and it was still underneath the purple and the
Still
gold.
underneath that purple. You know,
Yeah.
I think people are through remodeling their homes. I think they did that during the COVID lockdown, and a lot of people are going back to work.
Yeah.
And
This
that-
is about the agricultural stuff though, fertilizer
Oh.
and stuff like that. And so, like I say, my theme this year in 2022 is that the commodities are peaking, and that would mean your fertilizer and your oil stocks and your metal stocks. And that theme seems to be pretty much happening because if you put up NEM, which will give you the Newmont mining, I don't think you have to be a genius to figure out that looks like the highs are in.
Yep. And we've got I call them attractors.
Yeah.
See, it's under this attractor.
Yeah.
And where's the next one down? It's here.
No, it looks like it wants to blow out 50s and turn it into, like Simon was saying, we could go down to the 1500 level. And if we did that, obviously Newmont Mining wouldn't be very happy about that.
Nope. What are they mined for gold?
Yeah, they're one of the
Any other
lead.
thing?
Yeah, I think they do some silver too, but if you put up SIL, you'll see that's certainly no shelter from the storm.
No, definitely not.
And another
reeks of bear market over and over and over.
Yeah, and FCX was one that I did very, very well in, but I dumped it, thank God. And now it looks like it's holding on for dear life. I mean, this thing was up at $50 and it came up from 10. So once it was in the 40s, it was sayonara, which is what I did, and you can see why by looking at your purple and gold. Once it got into that 40s, was definitely a time to dump it.
Yep, time to dump it was right back here.
Yeah.
See where the cursor is?
Mm-hmm.
So 37.77 is the bottom of where I would have held on to that. But then, the sell signal's right here, 328.
I mean, they had a bounce the other day because of the $220 billion infrastructure / stimulus thing that China's supposed to be doing. But then again, this week, they're saying there's a new variant over there. So,
no.
Yeah, so that's the problem in China. Plus, the other thing that happened, if you put up FXI, because they had a very nice bounce. But once I heard that inflows into the ETF was like a big record, I knew it probably was too late for the thing. So ever since I heard that report, this thing's been coming down. It's kind of hanging in there, but another lockdown.
Rumor, sell the news.
Yeah, another lockdown certainly wouldn't help this thing either. And KWEB, KWEB is another one that people try to keep an eye on, which is your tech.
That's the China tech.
Uh-huh.
Yeah. Well, they've got a buy signal right here.
Yeah.
Then you take the profits right there.
Yeah.
Buy signal here, take the profits there. I'm sorry.
And Las Vegas Sand. Yeah.
What's the Las Vegas?
Las Vegas Sand is LVS, and that was trying to get going, and then all of a sudden they're closing down Macau again. So you can't get people to gamble all their money away if they're not allowed to come. You know what I mean?
Well, isn't that the truth?
Yeah. But can you see it was trying to get going? It got above your purple and thing, and all of a sudden here comes another variant. So I don't know. These guys need to wash their hands over there or whatever. But it seems like there's a ton of variants over there, and well, they have a zero policy. So if one guy
Nobody
has
goes outside.
yeah. So anyway, they were trying to moderate that because their quarantine time went from 14 days to 7 days. So they were trying to take some steps to moderate it. So it could still be a good situation, but as most things, it's when it's choppy, it's hard to hold on to anything.
Yeah, it's got some room left to go on the downside.
Yeah. Simon, I was wondering if there anything that you'd like to put up, on other things you might be looking at, or maybe.
Yeah, I want to show you something interesting that we pointed out today.
Please.
Let me share the screen again.
Yeah.
This is something extremely interesting, and who knows if it will actually happen. But let's put this screen up again. Okay. Now, something that we noticed is we could get a situation where the euro and the dollar on par, one euro equals $1.
Yeah.
But also at the same time, we could get the Swiss franc and the dollar on 1-to-1 as well.
And that actually, that's a bigger story, Simon, don't you think? Because the Swiss franc has always been a fairly, strong currency.
The Swiss franc's been up at 1 already this year. Yeah.
Okay.
I mean, it's already been around 1. But imagine if this pushes up to 1, and at the same time, the euro it's only around 70 pips at the moment. We went around 52, like 52 pips, 52 ticks, or whatever you want to call it, away from being 1-to-1 with the euro and the dollar being. So just the thought that if you 1 euro could equal $1 could equal 1 Swiss franc, that would be very interesting.
Well, Germany's slowing down. Boris Johnson's out. Of course, they're not in the euro, but the inflation rates I saw in Italy and some of the other countries are very elevated. So, it's not a shocking thing, and the ECB, again, they're like asleep at the wheel here. Inflation's going nuts, and these guys are still in negative interest rates practically. And, so.
How high is inflation over there?
8% or better.
Well, we're hitting 8.8.
Yeah. But we have an economy, and we have people working, and we got people making money and spending money. And that is a little different than, hoping visitors will come to see the Sistine Chapel this week. You know what I mean?
Right.
Anyway, that's what Larry Summers said. He said, the dollar is going to be firm because Europe is a museum, Japan is a senior center, and China is a jail. So where are you going to put your money? Very, very crass, but very, succinct, I guess. Huh?
Yeah.
Yeah. Okay. So, Simon, how about spending just a few moments when people come to you? Here's some of the things you try to work with them on, developing a plan. Yeah. On developing a plan.
So if I'm working one-on-one coaching with someone, then what I will do is make sure that at the end of the coaching sessions, they have a trading plan that we've proven has a positive expectancy that actually makes them money consistently over time. So, I'll take them through the whole process of how to actually write the plan so it fits their personality and lifestyle, and then actually how to test it, and then how to actually put it out into the live market with real money, and how to track everything and improve on a trade by trade basis. Well, we actually look at a number of trades in one go, and then we, you usually do trade walkthroughs, and then the next number of trades that the trader goes through, we usually see an improvement until we get to a level where they're consistently profitable. So that's kind of what I do if I'm working with people one-on-one. Otherwise, we have a training. It's called How to Read the Market Professionally, which will take traders through how to read price action. So where you can see these levels. Like today we said, let me see if I can actually show you that. I think it was how to know when the level's going to break or not. And this is a prime example from today. Yeah, here's the example over here. So here's an example over here that you may think this is a good level to buy at, but not here. So the course will go into details why this is not a buy, why you don't want to be buying here. And you can see that today we broke that level and came to the downside. So how do you know which levels are going to hold? Like, why did it hold here and not hold here? So basically we go into the price action and the understanding for the reasoning behind it. So what I've done over the years, if a market does something like this, I try and understand why, in terms of price, in terms of orders in the market, in terms of supply and demand. So I want to know when the market doesn't do what I expect, why is it doing this? And how do I figure that out? And how do I understand how it's going to do it next time? And so it's not just price did this. I want to know the reasoning behind it in terms of buyers and sellers in the market, which is the forces that move. Remember, buyers and sellers, supply and demand, or demand and supply, buyers being unfilled orders in the market. That's what demand is, and unfilled or willing sellers in the market is supply. So understanding where they are and when those orders are likely to be filled, and using that to understanding the forces of the market. So just like Newton understood forces in nature, so we understand the forces of supply and demand, which are the only forces that move markets. So we can understand how to see that. That's why I mentioned Newton's law. When you break a level, for example, and you go on top of a big drop, you usually get, and you see, here's a perfect example of it here. Look at this. You see this? Look at this move up, and then the break at this level, and the move down. You see this move up and this move down. You get these happening all the time. You get this force up, and once it's broken, you get the force down. So understanding that in terms of forces. So that's basically what we do. We're super focused and acutely focused on price action and the reasons for price movement in the market. That's one part of what we go through. And we have a live trading, and we do this every day, and we're pretty accurate. I had a number of years ago, a postdoctoral research fellow from Stanford University went and audited, I think, about 8 months of my kind of data trades and everything. And he went through it himself in a true PhD kind of postdoctorate style. And he came back with me, and the accuracy of that was this was probably about 4 or 5 years ago now. And he came back with an accuracy of 85%, just under 84.6 or something like that. So we round it up to 85.
Yeah.
So just understanding price action.
Yeah. And the other thing is you can make it adaptable to different people who have different amounts of time to dedicate it to. If you have a full-time job, obviously working with 15-minute graphs are going to be a rough racket. So you try to adapt. You try to adapt trading methodologies around the reasonable schedule that you're working.
Correct. We have a room of traders who are trading. I can show you this. Let's see if I can show you this.
Because, I don't think people that wasn't clear to me, but it's now become very clear to me, is that people have a profile, and then you try to set up some type of a trading methodology that is more appropriate for their profile.
Yeah, so I'll give you an example. Here's our this is our Discord. This is our Discord NQ at the open. So we have traders in there. Jane is someone who is now having her own, she has her own training now. I trained her about over 4 years ago. She trades about half an hour or less every day. So she'll let's see if I can actually put this up so you can see it. So you can see these are trades that she posts in beforehand. She's trading the price action at the open, and she'll take trades sometimes on a 2-minute or 3-minute chart, 5-minute chart. And you can see, these are trades that she's taking. So this is one of her trades today. And, she has a full-time job, and she trades, she takes a little lunchtime break. She works in, and she takes, she trades maybe 10 minutes, half an hour, however long the trade takes. So this one, if it was on a 5-minute chart, maybe this was 10 minutes, 10, 15 minutes, 5, 10, 15.
Yeah.
She'll post her trades. Here was a setup. This is today. I was trading with someone, so I couldn't be here. Take a look at the setup and targets, and you can see. Buy. Yeah, you can see what's going on.
Is that where Kramer gets that buy thing? Is it from Thinkorswim?
No, that's mine, I'm afraid.
Oh, that wasn't me.
I heard that on Kramer, and I just thought he had taped somebody yelling that, but it's actually off of.
Sell. See, there I have a recording of Sam Tinnis, my writing partner, who and in the my automated strategy will call out, will play that sound when it sees a buy or a sell.
Okay, so it is something that he's recorded. It's not like it's
Yeah, I
on
had him
the,
record it and then I imported it into TradeStation.
okay, I got you.
So
Well,
I have
now
also-
I learned something today, if nothing else, is where that yelling comes from when I listen to Kramer. He
Yeah.
hits some kind of button and it goes bye 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 bye. So we go.
Yeah.
Okay, Sonny.
So-
Before we run out of time, let's Sonny give a little background
okay.
on what's going to happen over at Money Mentor and how people are going to benefit when they talk to you.
Well, there's a lot of free things there. There's a free trading room every Tuesday morning at the crack of dawn. There's free sunny side of the street. I do free forums and I have a free podcast. So there's lots of stuff available for free.
Mhm.
But I also do mentor and tutor one-on-one coaching like Simon does. And I teach people to trade the way I trade. So he teaches people to trade the way he trades and I teach them to trade the way I trade with Sunny Bands.
Right.
And I don't keep anything back. I tell them exactly what I do and how I've been
Well,
doing.
can you throw up those Sunny Bands so people can get another look at them?
Sure.
Because one thing that I find very interesting, and I've been doing this for decades, is that you can plug in anything you're looking at and do a little bit of a litmus test on it and see how it does look based
And
on
it
your
doesn't-
analysis. Yeah.
It doesn't matter if it's a 5-minute or 1-minute, daily, weekly, monthly chart. It doesn't
Yeah.
matter. They all work the same on any symbol.
Yep. And so this is a way of quantifying what's going on with what you're looking at on all different time frames based on the kind of trading you're doing. And it certainly would be an additional ingredient into the decision making.
Well, and as you know, it's all I use. I've been
Yeah.
using, I invented Sunny Bands 35 years ago.
Right.
I've been trading for 41. I invented that 35 years ago. I've been using it ever since, exclusively.
Right. And this is, very, very helpful. And as you can see, you got things that you're following, but you also can plug in anything you're looking at. And, these people that ran into the energy market in June and May, because some guy who sells a newsletter said, get in there, get in there, get in there, your stuff would have had them avoid quite a bit of problems here. Because I mean,
Absolutely.
believe me, in the months of April, May, and June, there was a lot of touting going on.
Well,
And
there's the
talk
sell
about the
signal.
absolute worst time to get in.
Yeah, there's the sell signal right there in
Yeah.
crude.
I mean, put
Yeah,
up Devin, just
right.
just put DVN before we run out of time. DVN, because that's the poster child of the energy market. And this thing could do no wrong. Could do
And
no
there's the
wrong.
short signal. Right
And then
there.
you got the short signal at $75. Now it's at 50. So rather than having 33% of your money in the middle of I-5 burning up, you could have used your stuff here and had a good reason why there was no reason to be in it after 70.
Exactly.
Yeah. So.
Okay.
All right. Well, again, you guys, let's put your contact information up there so people can get a hold of you. You do have two different kind of things going on, so I think that's interesting. So, Simon, you want to put your Sonny, you're up. Put your information up there so people can get a hold of you.
I lost the chat window.
Well, it's moneymentor.com,
Yeah, so it's
correct?
moneymentor.com. It's
Mhm.
Sunny, SUNNY at moneymentor.com.
Okay.
And I like it when people call just to chat. So I'm at 760-908-3070.
Yeah.
That's
And then
my
when they
cell. You can reach me
yeah.
anywhere.
And when they chat with you, they can see the appropriateness of incorporating your stuff into their stuff. And then you get to know them better. And then you could maybe, obviously tweak things towards their interests.
Yeah, absolutely. And I like, I look at people's strategies for free and tell them what I think.
Yeah.
So
Yeah.
just give me a call.
Okay. Simon,
Sure.
contacting
Can I
you?
just take the screen a second, son?
Sure.
Just
Sure,
show
go
you.
for it.
Let's try again. Okay, got it.
Technology. Can't live with it. Can't live without it.
Okay, so if anyone wants to contact me, you can go to my website, it's tradesmartforex.com. You can see here.
Bye.
That wasn't me.
Sorry.
It's okay.
Put a muzzle on that guy.
If I turn my volume off, I'll turn you guys off too. So I can't.
No, we're good.
So you can come here. I mean, you can get from my website, I have a YouTube channel, and you can go and watch some various videos. I'm going to start being more active on this very shortly. And more importantly, this week on Wednesday, if you want to come live, this is the first time we're doing this interactive. So you can go to this URL or get on my mailing list. Just click on here to get started now and put your details in here. Get on my mailing list, and then you'll get one of the emails that will go out that will invite you to come and join this, or you can just remember this URL and type it in and then just click here and sign up. And it's the first time we're doing this interactive. So with webcams on, and people can basically, instead of the people watching being kind of on the side and just watching, you can be there, with your webcam on. So we're going to be going through the markets and we're showing you some things that you can apply about supply and demand. You can apply to your own trading, and hopefully it will help you.
Absolutely. Okay, guys, thank you very much. As far as the Option Professor is concerned, go to the website, option, professor.com. We have the PDF report on how to hedge against market declines as well as upside surprises. In my view, everyone would benefit from at least learning how that works, because just imagine how much risk has been in your portfolio since January that could have been hedged off if you knew how to hedge. So using common sense as your guide, who knows if there's another leg down or not. We also know that at some point there could be a very big upside surprise. So the PDF report goes over both instances. So that's optionprofessor.com. Go over there and put in your details and we'll get the report out to you. And that's optionprofessor.com. Thanks a lot, Sonny. Thanks a lot, Simon. We certainly gave a wide range of information here, and hopefully people will be able to get a hold of you and find out how they can help.
Thank you so much.
You bet. Great. Every time to be together with you is always a good time. So here I'm sending it back to David.
All right. All right. Thanks. Yeah, great show today. So just a reminder, be sure to subscribe to Timing Research on YouTube and your favorite podcast app. And also the recording for today will be posted to TimingResearch.com. This post at the top of the page will become the archive as soon as I can get it ready. And I just want to thank my guests again for today, Sonny Harris of MoneyMentor.com and Simon Klein of TradeSmartForex.com and the Option Professor of OptionProfessor.com. And just a reminder too, like I mentioned at the beginning of the show, be sure to check out Wealth365.com the rest of the week. They have a great lineup, and their event goes on all this week until Saturday. And then also be sure to join us next week for another big Synergy Traders event. So that'll be on TimingResearch.com. And the theme for this one will be investing and long-term trading. So we'll have the normal show on Monday, but then on Tuesday, Wednesday, and Thursday from 10 a.m. Eastern time until 8 p.m. Eastern time each night. We're going to have presentations on investing and long-term trading. So be sure to join us for that on Timing Research. And thanks, everyone.
Thank you, David.